Welcome to Quick Takes. My name is Michael Antonelli. Today's topic is going to be potential tax changes in the Biden administration. I'm joined today by Kelsey Clair, who's a tax strategist for Baird. She also appeared on our American Rescue Plan video talking about the stimulus checks that went out to U.S. taxpayers. Kelsey, thanks so much for coming back.
Absolutely. Thank you for having me.
So we got a couple things we want to talk about today. These are proposed changes to the tax code. These are not in law already. These have not passed votes. They're not out of Congress. We are just talking about potential tax changes. We're going to talk about a couple things: top tax rate, the capital gains tax rate, and then some tax credit extensions. But first, Kelsey, let's lean in a little bit to the proposed changes to the top tax rate. Can you let us know what those are?
Yeah, so currently our top ordinary income tax rate is 37%. Now that rate was built into the Tax Cuts and Jobs Act, which passed back in late 2018. So now under this proposal, that 37% would be increased to 39.6%, which happened to be the rate back in 2017 before the Tax Cuts and Jobs Act was enacted.
So this is a hike in the tax rate from 37, which was under President Trump, up to 39.6, was what it was before. What are the income limits? Who would this affect, single and married?
Mm-hmm. So right now the proposal has the 39.6% affecting those with income at $452,700 for single filers and $509,300 for married filers.
So $452,700 if you're single, $509,300 if you're married. Above that would go back to the 39.6. Below that, any proposed changes for below those limits?
Not in this proposal, and we don't foresee that being the case. Biden, during his candidacy, said on numerous occasions that he would not be increasing the tax for anyone that made $400,000 or less. So we don't foresee any changes at that level.
And this 37 that was the top tax rate was cut to under President Trump, was that set forever? Was there an expiration date on that? What did that look like?
Yeah, so as part of the TCJA, that 37% reduction to 37% was set to sunset at the end of 2025. So it was going to revert back to the 39.6% starting in 2026.
So Congress would have had to renew these. The president would have had to renew these in 2025 or sometime before that. They were going to sunset for the 2026 tax year. So the current proposal is to go back to the old top tax rate for again, single $452,700 for single and $509,300 for married. So let's now focus on the capital gains tax rate, the proposed change to that. Can you talk us through that?
Sure. So right now, long-term capital gains and qualified dividends are taxed at a maximum rate of 20%. Now that doesn't include the net investment income tax of 3.8%. So all in, we're talking 23.8%. This proposal has those capital gains and long-term capital gains and qualified dividends being taxed at the top ordinary income tax rate of 39.6% for those that have income over $1 million. So when you take that 39.6% and factor in the 3.8% net investment income tax, we're talking a 43.4% tax rate.
So make taxpayers who make more than $1 million in income in a year, so AGI over $1 million, it's going to go from 23.8 to 43.4. So that's a significant hike to taxpayers who make more than $1 million. Is there any proposed tax changes to the capital gains tax for people who make less than $1 million?
Not in this proposal, there is not. The one thing I would mention here is even if your income is above $1 million and your ordinary income though falls below that $1 million, that means that some of those capital gains will be taxed at the old 20% rate, and the capital gains that will be taxed at the 39.6% rate will only happen once your income hits $1 million. Okay. So anything above that $1 million is where that.
So there's some nuance to that too, right?
Correct. Mm-hmm.
And what is the proposal to start this tax? Like, is it for any transaction in 2021? What did they pick a date?
The proposal right now has a late April of 2021 date. So that would mean that you couldn't really do anything else during the year. It's already effective, but policy experts do think that this date will change, likely to be later on this year, probably still in 2021 at some point, but probably a little later on, closer to the date that any proposal is actually signed.
Gotcha. So their initial thinking was April, but tax negotiators are saying it might be later than April.
Right.
So that's the top tax rate change, the capital gains tax rate change. Talk us through a little bit about some extension of tax credits. I know there's some stuff that has been kicked around as part of a proposal. What do those look like?
Yeah, so there were a few changes in the American Rescue Plan Act related to tax credits. So there was the Child and Dependent Care Credit, the Child Tax Credit, as well as the Aca Premium Tax Credit. These all pretty much just expanded the amount of credit that taxpayers could claim. Now, this American Families Plan proposal would extend those. So some of the credits would be extended through 2025, while others would be permanently extended. So this could be, great benefit for especially families with children in the future.
And those credits, were they for certain income levels, or were they just kind of varied depending on what the credit was?
They vary from credit to credit. So the ACA Premium Tax Credit, that is actually going to be eligible for all income levels, while the Child Tax Credit and the Dependent and Child Dependent Care Credit will be for income levels below $400,000.
So these are some potentially big changes that could occur. And one of the things that we want you to do is to consider whether these might affect you and your financial plan. There's a reason we call it financial planning and not a financial plan, because it's an organic process. Tax changes can occur. You know what they say about death and taxes. We want you to make sure you're engaging with your advisor about these changes if you think they might affect you. Kelsey, any kind of last words you have for our audience here?
Yeah, I just kind of reiterate what you just said. These are proposals. This is not into law yet. I wouldn't make any rash decisions. But, you really should start at least having the conversation with not only your financial advisor, but your tax advisor as well.
This is a great opportunity to have those conversations. Crazy markets, tax changes, these are all great opportunities to reach out to your advisor, your tax accountants, anybody, and talk through these things. Baird will have a little bit more content coming down the line in blogs and video and audio on this as we kind of watch this unfold. So thanks for coming to our quick video, and we'll see you soon.